Out of every dollar you send to your credit card company this month, 88 cents goes straight to the bank. Not to your balance, not to your future, to them. I'm going to show you exactly what that means on $51,000 in credit card debt. And then I'm going to show you the velocity banking strategy that drops $308,000 in interest charges down to $12,000 with the same income you already have. Let's get into it. Now, here is what is actually happening to your money right now. You have 4 credit cards, right? I recommend 3 to 5, right? $51,000 total. The average rate across all 4 is roughly 20%. Your minimum payments add up to $1,020 a month. Now, that sounds like progress. It feels like you're handling it. But in month 1, out of that entire $1,020, $902.50 goes directly to interest charges. Only $117.50 actually reduces your debt. So you sent over $1,000 to the credit card companies and your balance went down by $117. And that's not a typo. That's how credit card interest works at 20%. And if you keep making those minimum payments and letting them shrink it as your balance slowly drops, you'll be paying on that $51,000 for 50 years. And your total cost, it'll be $372,000. The bank turns your $51,000 into $372,000. 50 years, $372,000 on $51,000. That is what you're actually agreeing to when you sign up for a credit card and make minimum payments. Now let me show you how you're supposed to use it, right? How velocity banking changes every single one of those numbers. Here's the core idea behind it. Your money has velocity, meaning it moves. The problem is that right now your money is moving in the wrong direction. Your paycheck comes in, it sits in your checking account, it loses value, slowly drains out through expenses over the course of the month. That entire time, it's sitting there. It's not working for you, it's just waiting. Velocity banking changes where your money lives while it waits. So get this. Instead of your paycheck sitting in a checking account earning nothing, it sweeps directly into a HELOC, let's say. Okay, and because a HELOC charges interest on the average daily balance, that's every single day your paycheck is sitting in that HELOC, it is reducing the interest you owe. Then your expenses cycle through the HELOC the way they used to cycle through your checking account. The net effect is that your average daily balance on the HELOC stays lower than it would otherwise. And a lower average daily balance means less interest charged every single month. That is the engine. Now here is how it connects to your $51,000 in credit card debt. Your HELOC or your personal line of credit, whatever line of credit, your credit cards are at 18, 19, 21, and 24%. That gap is the most important number in this conversation, that interest rate. When you use your HELOC to make a large lump sum payment, what we call a chunk, on your highest rate credit card, something significant happens. That balance moves from, in this case, 24% interest to 8% interest overnight. 24% to 8. That is a 16-point rate reduction immediately on that entire balance. The bank was charging you 24 cents on every dollar every year. Now they are charging you 8. It's the same balance, dramatically less interest. And your paycheck sweeping through that HELOC every month is continuously chipping away at it from the other direction. This is the interest rate arbitrage that makes velocity banking different from every other debt payoff strategy you've ever heard of. You're not just paying more, you're restructuring where the debt lives and what rate it carries. Now let me walk you through exactly what the math shows, all right? This is math. Month 4, the first chunk happens. $18,000 moves from card 1 at 24% to the HELOC at 8%. 16% rate reduction immediately. Month 8, the second chunk. Card 2's remaining balance of approximately $14,600 moves to the HELOC, 13% rate reduction. Month 12, card 4, $5,600 moves to the HELOC at 10% savings. Month 20, the final chunk. Card 3's remaining balance clears to the HELOC. Now here's what that sequence produces. Traditional minimum payments, 50 years, $321,000 in interest, right? Avalanche method at the same $1,020 a month, 10.8 years, $80,000 in interest. That's better. It's significantly better, but still $80,000 going to the bank. Velocity banking at the same $1,020 a month, 10 years, $12,400 in interest. The avalanche saves you $241,000 versus minimums. Velocity banking saves you $308,000 versus minimums. And it saves you an additional $67,000 versus the avalanche on the exact same monthly payment. Same income, same $1,020 a month. 3 completely different outcomes. The only variable is where your money lives and how it moves. Now, I want to address something directly because I get this question sometimes when I talk about velocity banking. CJ, I don't have a HELOC. What do I do now? Folks, here's the honest answer. If you don't have a HELOC, you don't need a HELOC, right? The avalanche method is still dramatically better outcome than minimum payments, going from 50 years and $321,000 in interest down to 10.8 years and $80,000 in interest. That's a $241,000 improvement on the same payment. Start there while you work toward qualifying for a HELOC or use a HELOC, right? But here's what I want you to understand. The HELOC is not out of reach for most homeowners. If you have equity in your home, even modest equity, you may qualify for a line of credit that changes everything about this math. And the sooner you get it, the sooner the rate arbitrage starts working in your favor. The question is not whether velocity banking works, right? The math is clear on that. The question is whether you're positioned to use it yet. And that answer is different for everyone. I know that everyone in our community, they're equipped because they have us. Now let me talk about something that does not get discussed enough in personal finance. Most people treat debt like a weather system, like something that happens to them, like something they endure until it passes. Velocity banking treats debt like a math problem, and math problems have solutions. I'm not going to pretend this is easy. Sweeping your paycheck into a HELOC and cycling your expenses through it requires a level of awareness about your cash flow that most people were never taught. And it requires you to understand your numbers, your income, your expenses, your rates, your balances. But here's the thing about that awareness. Once you have it, once you can see your money the way velocity banking teaches you to see it, you'll never look at a credit card statement the same way again. You'll never see a minimum payment the same way again. You'll see it exactly for what it is, and that clarity is worth more than any single strategy. I want to tell you something about the moment I first understood this. I was looking at a client's situation. And for anonymity purposes, we're just going to leave her name out of it. She made payments every month, never missing, doing everything right by the conventional standard, and her balance had barely moved. We ran the numbers, and what we saw stopped us both. She had paid over $40,000 toward her credit card debt in 4 years, and her balance had gone down by less than $8,000. More than $32,000 was gone, folks, to interest in 4 years of doing everything right. And look, she wasn't irresponsible. She wasn't undisciplined. She was just using the wrong strategy, and nobody had ever shown her the math. Okay, and that's why we make these videos. Not because the strategy is complicated, it's not. But because the math is invisible until someone shows it to you. And once you see it, you can't unsee it. The credit card companies are counting on you not seeing it. Every month you make the minimum payment and let it shrink, they win. Every month you carry a 24% balance when you could be carrying an 8% HELOC balance, they win. They designed the system this way on purpose. Velocity banking is how you stop letting them win. Now here's where I want to go next. If you're serious about applying this to your specific situation, your specific balances, your specific rates, your specific income, then we have the link in the description below. You can join our community, you can talk about the Money Max account, or even the passive income generator. It's not a generic scenario we go through. We go through your numbers so that you can see what you need to do. Now, if you see a video on this screen right about now, you know what? That's a sign. That's a sign that you need to click it. People who are just figuring out their numbers, people who are in the middle of their first chunk, people who have paid off 6 figures and are now building wealth, right? They're in our community. The community is real. The conversations are real. And the one link is in the description below. $51,000 in credit card debt does not have to cost you $321,000. Now you know what you're doing. God bless you, and we'll see you in another video.